Good day, ladies and gentlemen. This is another recording that I will be doing on a very lovely topic called subsidiary journals. Your cash receipt journal, your cash payment journal, your debtors journal, your creditors journal, and their allowances, meaning their returns. When I'm saying their allowances or their returns, I'm therefore referring to debtors allowance journal, where the customer returns back to us, and the creditors allowance journal, where we record back to our suppliers. I just would like to read the information provided before I continue. The information below was extracted from the accounting records of Malamulele hardware traders during the month of March 2023. And the business sells building materials. So honestly, this is a hardware trading company. A constant markup percentage of 20% on cost price is maintained, and VAT at 15% is included where applicable. So the minute there is VAT inclusivity where applicable, then we can assume that this company is a VAT vendor. If they are a VAT vendor, that means they can record input VAT and they can also record output VAT. That is why now when you see in the information that I've already completed for you with regards to the subsidiary journals being our cash receipt journal, you can see that there is a column for VAT, which indicates that this company is really a VAT vendor. There we do have VAT column in all of them where applicable. We do have VAT, others are input VAT, and others are output VAT. In VAT as an asset or VAT as a liability. That's a story for another day. So I've already done the template of each of the journal. We just need to record to the applicable journal. We now are required to record the above transactions in the correct subsidiary journals of Malamulele hardware traders for the month ending 31st of March 2023. So this is the month we are dealing with. We are required to round off amounts to the nearest rands. So now these are the amounts that must be rounded off to the nearest rands. Then now let us start with the first transaction. Then we see where each of these transactions supposed to be recorded. Remember, we are dealing with a VAT vendor in this case. Now we have transaction number 1 that says Chauke or Chauke, the owner. So Chauke, we know now that the owner of this company is Chauke. Transferred the whole of 560,000 from his personal account to where? To the business bank account. And receipt number 008 was issued to the owner. If the owner gives something to the business, we know that is called capital contribution. It does not matter is it in what form. In this case, the capital contribution is in the form of cash because the owner transferred from his bank account, personal account. So meaning that is cash the company or the business has received. Now, obviously, this means two accounts are affected. Cash, which we call in accounting bank. Another account is called capital contribution. Now, I just want to explain this from the perspective of the general journal. In terms of the details, you'll see why I use the general journal just to explain some of the importance of the recording columns in the subsidiary journals. The business has received money. And if the business has received money, that means cash in the bank will be recorded on the debit side as 560,000 rands. This money is capital that was contributed. We have capital contribution. Then on the credit side, 560,000 will be recorded as capital contribution. Now we are recording this in the subsidiary journals, not in the general journal. The general journal, I'm just using it to explain some of the things that I believe to be crucial. Now we know that this is a cash receipt journal in terms of the subsidiary journal, because the company has received money from the owner. Now let us go to the cash receipt journal and we'll see how can we record. This is day number 1. Document number, can just verify that document number for this one, it was 008. So now we have document number 008. Who gave us this money is Chauke, who is the owner. How much did we receive in the bank account? 560,000. Remember, it is under the bank account. That is the debit side of this entry in the general journal. This debit side, bank does have a column. So the question is, does bank have a column? Yes. If bank does the column, then the first 560,000 on the debit side must be recorded under the column of bank. Then after we come to the credit side. The credit side is capital contribution. How much? 560,000 rands. Does capital contribution has a column in the cash receipt journal? The answer is no. The minute the answer is no, then the amount of the capital contribution will be recorded under sundry account. So that is why now we record the capital under sundry account. The question is, what is this 560? The 560 is capital contribution. You are explaining, because sundry is a lot of things that get to be recorded that do not have a column. So that's why now the other 560,000 goes to the sundry. It is the credit side of this general journal from a general journal point of view. So now that is how we decide to say this one will not have a column and will be recorded under sundries of that specific journal. So now that is why the other 560 then goes to the sundry column, and under details we specify that this is a cash receipt journal. Now we then look at number 2. The business purchased. The business purchased or the business bought what? New delivery vehicle. When you do taxation 1 or taxation 2, you will then understand the importance of specifying that this motor vehicle is for delivery purpose. But at first year level, it's not much important for you to understand or separate a motor vehicle as defined by size and a delivery vehicle. But we bought a vehicle. The cost of this vehicle in terms of the invoice, it was 345,000 rands. Obviously, remember, we are a VAT vendor. VAT here is included. When you buy something from a VAT vendor, VAT is already included in the total price of the invoice. And the document number of the invoice is 663. How did we buy this motor vehicle? It was bought on credit. From who? From Bedwell Motors. So the minute we buy on credit, we know that creditors journal or purchases journal, where we record everything that is bought on credit, is the journal where this transaction will be recorded. Now that we bought this, remember, we being a VAT vendor. Now let us then do the same thing. We record it in the general journal once again, so that we can check which one has a column to be recorded under and which one does not have a column. What did we buy? We bought a vehicle. So meaning our vehicles as an assets will increase. Because we are a VAT vendor, therefore now we need to separate VAT input from the cost of the product. Then after we'll have on the credit side what we call creditors control. Creditors control. Bear with my writing. we are owing our creditors the entire amount of 345,000 rands. Now we then need to calculate now how much is the amount of VAT. Remember, the cost of the product must not include VAT if we are a VAT vendor, meaning we need to separate VAT so that the cost of the product, which in this case is the motor vehicle, must not include VAT, because SARS does allow us to claim that VAT input. So 345,000 rands times by 15, we are looking for the VAT amount. Divide by 115. Why? Because the amount we have, which is 345,000, is inclusive of VAT. So if the amount is inclusive of VAT, that means that amount is out of 115. We added 15% to 100%, then it became 115. So you multiply by what you are looking for, you divide by what you have. So we are looking for 15% VAT amount, that's why we multiply by that, then we divide it by 115. Now on that same note, we say equal 45,000 rands is the VAT amount, input VAT. So here we have 45,000 rands. That means the cost of the motor vehicle will be 300,000 rands. Now that means 3 columns will be affected. 3 columns will be affected. Now we need to ask ourselves, does motor vehicle have a column in the journal? Remember, we bought on credit. This is the creditor's journal. Does motor vehicle has a column in the creditor's journal? The answer is no. So now where will it go? It will go under sundry accounts. Does VAT input or VAT has a column in the creditor's journal? The answer is yes. Then 45,000 will be recorded under the VAT column. Does creditors control has a column in the creditors journal? The answer is yes. Therefore, the 345,000 rands will be recorded under creditors control column. So now that is how you decide to say which one will be recorded under which column. I know it might be a long way, but I hope it's explaining a lot of things when it comes to the other columns and the understanding of this. This is transaction number 2 that we are dealing with, day 2. Document was 663, if I still remember well. Details, it is Baldwin Motors. Baldwin Motors. How much is under creditors control? Creditors control is the full amount, 345,000 rands. This is how much we are owing this company for the motor vehicle we bought from them. Do we have anything to do with inventory? Are we buying this in order to sell it? The answer is no. So do we have VAT? Yes, VAT is 45,000 rands. Remember, VAT is there 45,000 rands, and we said VAT does have a column. Now, the other entry was the one of the vehicle, which is 300,000 rands. We look at the columns in here, there is no column for vehicle. So what do we do then? Then the 345,000 rands will be recorded under sundries, and under details we then need to say vehicles, or vehicle that we bought. Vehicle is what we bought, not more than one vehicle. So that is how we end up recording under sundry accounts. Then now we go to transaction number 3. Transaction number 3, that is where we are. It says an amount of 1.5 million was received. If we receive money, guys, we receive money. If we receive money, we receive money, bank will increase. It was received by who? By us, not somebody else. By Malamulele Hardware Traders. From who? From Mzansi Bank as a loan. So the other entry that we are recording is the loan. Remember, a loan is a liability, and liabilities increase on the credit side. The more loan we have, the more liability will be increasing on the credit side. And this reflects under bank statement number 3 as our source document. So now we have received, then this is a cash receipt journal transaction. If we have received, it's a cash receipt journal transaction. So now let us record this in our cash receipt journal. In our cash receipt journal. There we have our cash receipt journal. But before, let us once again use the same approach of the general journal, recording the debit and the credit. I always prefer to do this in two ways so that we both master the general journal while we are doing subsidiary journal. We received money, bank is a plus. On the credit side, loan, our liabilities are increasing. This is a lump sum of 1,500,000 rands. 1,500,000 rands. So now we need to ask ourselves, do we have a bank column in the cash receipt journal? Yes, we do have a bank column in the cash receipt journal. So the 1.5 million will be recorded under that column. Then secondly, do we have a loan column in the cash receipt journal? The answer is no, there is no loan column. That means the amount of the loan will be then recorded, the one on the credit side will then be recorded under the sundry accounts, the other 1.5 million. And under details, we have to say loan. We did have, this was transaction number 3, if I still remember well. Then we also had a source document, bank statement number 3. Bank statement number 3. It was BS3. This loan is from Mzansi Bank. Mzansi Bank gave us the loan. So that was transaction number 3. We go to transaction number 4. Now we are almost left with 12 transactions to finish all these transactions. Number 4 says the BPC manufacturers delivered 1,000 bags of cement. Invoice of 725 with an amount of 115,000 was received. With an amount of 150,000 was received. Remember the fact that it says with an amount of 115 was received. It does not mean we received 115,000. I want to be clear on that. Invoice 725 with an amount, meaning on the invoice it was written that we are owing BPC manufactured 115,000. So we received an invoice that says we are owing this company 115,000 rands. Not to say we have received money. What was delivered to us, or what we received 1,000 bags of cement. But we have not paid for them, and we have not received money for that. We just bought them. That means they are bought on credit. They are bought on credit. We received 1,000 bags, and we also received invoice, a paper stating that we are owing them 115,000 rands for the 1,000 bags of cement. Now let us calculate cost per unit. From a costing point of view, cost per unit will be 115,000 rands. 115,000 rands divided by 1,000. So divide by 1,000, how much are we getting? 115,000 divided by 1,000. That means a cost per bag before VAT is removed is 115 rand per bag. And VAT, remember, is included where applicable. And when you buy something from the supplier, VAT is included. Now let us record this in the general journal first. We'll see how will this be recorded. How will this be recorded? Now we have to Debit inventory, we bought inventory or trading stock. We bought trading stock or inventory. Because we are a VAT vendor, we will separate or remove VAT from the cost of the inventory. Then after, because we bought it on credit, we'll have our creditors control. We are owing 115,000 to our creditors. Then we need to say now the 115,000 that we owe to them, 115,000 times by 15 over 115. We want to know how much is the VAT amount. VAT amount is 15,000 rands. Then we need to know how much will be the cost of inventory. If you want, you can say 115,000 rands times by 100 divided by 115. That will give you 100,000. So the cost of inventory excluding VAT is 100,000 rands. So that will be the transaction that we need to record. First question, do we have trading stock as a column in the creditors journal? Yes. Do we have VAT as a column? Yes. Do we have creditors control as a column? Yes. That means all this will be recorded under their respective columns. They will not affect our sundry account column. Now let us go to our creditors control column. I will also come back in here and tell you the cost per unit excluding VAT, because this 115 includes VAT. So I will also do the cost per unit excluding VAT. We are recording under our purchases journal we bought on credit. So this is transaction number 4 that we are dealing with. And transaction number 4 had an invoice, which was invoice number 725. It was 725 if I remember well. This is BBC Manufacturers. BBC Manufacturers. How much are we owing our creditor? Remember now it goes back how much the creditor's control amount, 115,000 rands. We always owe them the full amount that include VAT. How much the cost of inventory, that is your debit side, 100,000 rand. That one must always exclude VAT because we are going to claim that 15,000. There is the column for VAT, 15,000 recorded under each of them. They are recorded in their respective columns. Therefore, now you can see from a general journal, there is no amount that does not have a column in this journal. So now that means the sundry accounts will not be affected. So that is the explanation that I just wanted to bring to your attention through the general journal and the recording to the given subsidiary journal. Moving very smoothly, we are moving now to transaction number 5. Okay, before that, let me then explain the cost per unit that exclude VAT. When we cut times this by 100 divide by 115, we'll get to the cost per unit that exclude VAT. It will be 115 times 100 divided by 115. We want to know how much the cost per bag of a cement, per bag of a cement, excluding VAT, per bag of cement. It cost 100 rand, excluding VAT. Why do we remove VAT? Is because we are going to claim this amount from VAT. We will claim it from SARS. We'll claim this amount from SARS and say, SARS, please give us back our amount of VAT. So now that is why. So the cost of a bag of cement is 100 rand. Please do note this because in the future it will appear. The cost for one bag of cement costed us 100 rand because the VAT will be claimed from SARS, which is the 15 rand per unit, which will be 15,000 for the total of the 1,000 bags that were bought. So now please have that at the back of your mind. And also lastly, if we say 1,000 tons by 100 rand per unit, this will give us the same 100,000 rands that we calculated here. 1 unit times by the number of units will give us the total of 100,000 rands. So it still works together in any way. Sorry, just erasing before the next one. Then now we go to the next transaction, which is number 5. Only 11 left. The business purchased window frame for 25,000 cash from Steel Boy suppliers. We bought for cash. This will be a cash payment journal. We paid. If you buy or you purchase for cash, that means you paid. So this is a cash payment journal. Now, if this is a cash payment journal and it's transaction number 5, then now we need to then look at the relevant columns that we will record. Now, what business are we doing? We need to ask ourselves. We are a hardware. So can we also buy windows? Yes, windows and window frames is also part and parcel of what a hardware buys and sell. So in other words, these window frames, they are our trading inventory. These window frames, they are our trading inventory. Remember, we are a hardware company, building a hardware company. So the window frames is part and parcel of our trading stock. How much did we pay for? 25,000 rands. Now let's go to our general journal once again. We bought trading stock. We have different types of trading stock. Window frames, we also have cement as our trading stock. We are a VAT vendor, remember. VAT input must be separated. Then we have our bank in this case. Why? We bought it for cash. 25,000 rands. It's not creditors control now because we bought it for cash. So now we need to come and say 25,000 rands include VAT. 25,000 times by 100, we are looking for the amount that exclude VAT. 25,000 rands times by 15 over 115. That gives us an amount of VAT. This is the VAT amount, 2,000 or 3,261. This is the VAT amount. Remember, we're required to round off to the whole number. 3,261. This is 3,260.80. So that will be 261. Then after we need to say 3,261 minus 25,000. This gives us 21,739. 21,739. That will be 21,739 as the cost of our trading stock. Remember, trading stock must exclude VAT. Either we could have said 25,000 times by 100. We are looking for the amount that excludes VAT divided by 115. Then that could have given us same 21,739. So here is our general journal once again. Do we have a column for bank? Remember, this is a cash payment journal once again. Do you have a column for bank? Yes. That means this will be under the column. Do you have a column for VAT? Yes. Do you have a column for trading stock? Yes. So all these three will go to their respective columns in the cash payment journal. In the cash payment journal, this is transaction number 5. If you remember, day number 5, we made a payment. The document was 005. We bought this from Steel Boys suppliers. Bank is what we paid. 25,000 is what we paid. Cost of the inventory 21,739. VAT 3,261. Correct? Yes. We don't have another one. So that means all these three, they are recorded in their respective columns. So the sundry column will not be affected. Then we continue on that same note. I know I'm doing two things at the same time so that you can master accounting quite well. Then we go to number 6. Only 10 transactions are left. Then we'll be done. With some time moving there on top, sitting at 30 minutes. Now we have done number 5. We are now doing number 6. An inventory with the cost price of 30,000 was sold on credit to my mere invoice was 010. An inventory with the cost price of 30,000 rands. Now, if the inventory was to cost 30,000 rands, remember we have window frames and cement, so it might be difficult to say how many cement did we buy, how much was the cost price. If this was only the cement, then we could say 30,000 divided by 100. Then we could say 300 bags of cement were sold. We could have said 300 bags of cement were sold on credit. We could say 300 bags of cement were sold on credit. Then after, if you were given only 300 bags of cement sold on credit, then what we're going to say how much the bag of cement is 100 rand per unit. Then we'll have to say times by 100 rand, and that will give you 30,000 rands. So I'm just assuming that we have sold only bags of cement in here. That is just my assumption. But remember, we also have window frames that were bought, so they could be included. But when we look at the things, it's like they only sold cement. But now let us leave it there. We know the cost price. Remember, the cost price does not include VAT. Therefore, now we need to say plus 20%. Then after, plus VAT. When you say plus 20%, it will give us selling price. When you say plus VAT, it will give us the amount that will be the data, the amount the customer will be owing us because sold on credit. Remember, the minute you sell on credit, then this is debtors journal. It is debtors journal. We already have the cost price, which is the cost of sales. Now let us once again continue with our same journey. Just use another template that is a bit bigger. We are still doing our general journal as a means to explain everything. We have our DR, we have our CR. We have made sales, so we debit our debtors control. Our customers or assets are increasing. How much is this customer owing us? Is owing us, let us say, cost price is how much? Is 30,000 rands times by 1.2, which is a markup percentage. Then this will give us the selling price, which the selling price will appear somewhere later on. Then times 1.15. That means the customer will owe us 41,400 rands. The customer will owe us 41,400 rands. We say cost plus markup percentage is equal to selling price plus VAT is the amount of the invoice the customer will owe us. Then after, we then now need to have our sales. We know that our sales will be times 100 divided by 115. So I'm just going back now using a backward approach, 36,000 rands, which that 36,000 is the same as 30,000 rands times by 1.2 is equal to 36,000 rands. Then after, we have VAT output. VAT output, I think we already know how much is our output VAT. I think I did already show the calculations. I want to minimize you and move you there. Then we have VAT output. 36,000 is the price before VAT. We can just say times by 15 over 100 or times by 0.15. So our output VAT is 5,400 rands. Then after, the second part of this is the recording of the cost of sales. Then we debit our cost of sales, then we credit trading stock. The cost of the products we are selling, or the cost of what we are selling, is 30,000 rands. It's already given to us. And we know that we could have calculated by saying 100 rand times by 300 if they only gave us the number of units and told us that we sold this number of bags of cement. So now that will be how this transaction will be. Remember, in here we only have one amount, which is the inventory and cost of sales. So in this case, we will record only one side of it, not double. Then now we have to say we are again doing debtors journal. This affects our debtors journal. Whenever you sell on credit to a customer, debtors journal is the journal to be recorded under. Now under debtors control, 41,400 does have a column. 36,000 does have a column, which is sales. VAT does have a column. Cost of sales / trading stock does have a column. So all these will be recorded under their respective column. Our VAT is 5,400. Sorry for that. I'm sure you have noted, or I hope you have noted. Then after we go to the debtors journal where we are selling on credit. This is transaction number 6. This is transaction number or day number 6. It was 010 when I was reading. Who is our customer? Our customer is Mia. Customer is Mia. How much is our debtor owing us? 41,500. Sales, I still remember to be 36,000 rands. Just verify that. There we recorded it as a column. Sales 36,000, VAT 5,400. So we record everything. VAT is 5,400. Cost of sales, how much do we have for cost of sales? It is 30,000 rands. And with that being said, we are all ready to go. So our cost of sales is the one column that we have recorded. Now this would have been recorded when the inventory was bought. That's a story for another day for me to explain that one. Why are we using the cost of sales as opposed to the trading stock? When we bought, we recorded under trading stock. Then when we sell, we record under cost of sales. Now we then have recorded this transaction. Then we go to transaction number 7. Transaction number 7. We are sitting now at less than 10 transactions that are left. Moving forward. Number 7 says the business, which is us, sold 100 bags of cement. For how much? For 13,800. VAT is included. Now I want to verify this 13,800 if is it correct. Remember the cost per bag is 100 rand times by 100. How much are we getting? I want to know the cost first. 100 times by 100. This gives us 10,000. 10,000 is cost price. The cost we incurred to buy, or the cost for the 100 bags of cement, is 10,000. We know that we say 10,000 times by 1.2. This gives us selling price. Then our selling price will be 12,000. Then we add VAT 1.15 times by 1.15. This will be our marked price, that is our debtor will be owing us. And it is 13,800. So I'm happy with that. I can just calculate my VAT here from the selling price, or either here, that is not a problem. Selling price is 12,000 times by 0.15. That means my VAT amount is equal to 1,800. Hence 1,800 plus 12,000, which is VAT, it gives us 13,800. My numbers now are sorted out. I know my cost price I know my selling price, which is cost price plus markup, and I know my VAT amount, and I know the amount after VAT, which is marked up price, the amount the customer will be owing me if the sale was on credit. It says the business sold 100 bags of cement for 13.8. VAT is inclusive, and I agree because 13.8 VAT is already there. Receipt 009 was issued, so we received cash. It does not say invoice. So the minute it says receipt, that means there is no data here. We sold for cash and moolah or money was received. Because it says receipt. Receipt is for cash that was received. So now debtors are not affected. Let us then do once again our general journal just to master the columns. In this case, we received money. If we received money, our bank account must be debited. Bank will be 13,800. The amount we received include VAT. Then after we'll have VAT output. Whenever we sell, VAT output is 1,800 on the credit side. It's a liability due to SARS, hence it's on the credit side. We're collecting it on behalf of SARS. Then after sales they are 12,000. 12,000 plus 1.8 is 13.8. Then we need to debit our cost of sales. Then we credit our trading stock. Our trading stock, we calculated it to be 10,000 rands. 10,000 rands. We said 100 times by the number of units. 100 times by just verify 100, that was 10,000. 100 bags of cement times by the cost per bag. One bag is costing 100 rand. Hope you remember that. We said 115 times by 100 divided by 115. It gave us 100 rand as a cost per bag. I did that calculation previously. All these have columns. All these have columns to be recorded under. And in here we'll record only one of them. Now this is our cash receipt journal. We received money and there was receipt number. It was receipt number 009 on the 7th day of the month of March. We had receipt number 009. Then in this receipt number 009, we received it cash. The name of the customer does not become relevant. How much did we receive? 13,800. We received the amount that includes VAT. How much is the selling price excluding VAT? It is 12,000. How much is the cost of sales? Cost of sales, it is 10,000. How much is the VAT amount? VAT amount is 1,800. All these, they have their respective column, cost of sales, sales, and the amount of bank, which in the general journal, it was recorded there as a debit. There does have a column, this does have a column, this does have a column, and this does have a column. Respectively, you could see the columns. So our sundries are not affected. And once again, we do not in inverted commas, but the amount is the same. The column does not say trading stock because the trading stock is recorded as trading stock at the point of buying the inventory. When we buy the inventory, we record under trading stock. But when we sell, we record on the contra entry called cost of sales. You'll see when we bought, we recorded under trading stock. Even if it's cash payment journal or purchases journal, it is under trading stock. Then cost of sales is therefore now the one that we are recording when we are selling. So now we are therefore now done with that transaction. Then we can go to the next transaction. Debtors, remember this one is not affected because we sold for cash and it's not the customer who was paying us. So no debtors are affected. We then go to transaction number 8. Transaction number 8, we are counting roughly 8 transactions left. The business processed EFT 007, this is the document number, EFT 007, with an amount of 30,000 in favor of Vodacom to pay the telephone bill. So now this is a cash payment journal. Who are we paying? We are paying for the telephone bill. If it's the telephone bill, what do we do with the telephone bill? The telephone does a VAT. The company that renders the telephone services is a VAT vendor also. So now we will debit our expense, which is telephone. We debit telephone. Then now we will have the VAT on the debit side, which is VAT input. Then after we have bank, how much did we pay? We pay the entire amount of 30,000. Then your VAT is input VAT when you incur or when you pay. Then we need to calculate and say, out of the 30,000, we want the amount that exclude VAT times by 100 divided by 115. So it gets us 26,000 rands, which is 26,087 in our cash payment journal. 26,087. 26,087. We can then say minus 30,000. This gives us 3,913. 3,913. This is our input VAT. We do have a column for bank. It will be recorded under the column for this. Do you have a column for telephone? No. Telephone will go under sundries with its own amount. Then we have made a payment here. Made a payment transaction number 8. It was document 008. And this is to who? To Vodacom. The whole of 30,000. How much did we pay? We paid the entire 30,000. That is the bank. It's not trading stock. VAT is, we calculated VAT to be 3,913. 3,913. There is no trading stock in the general journal either. There is no trading stock affected here. Then under telephone, we have to record under sundries because telephone account does not have a column. So we record the 26,087. 26,087. Then under details, we then need to specify that this was for telephone cost that we have paid for. So we continue now on that same note. We go to the next one. Less than 7 transactions are left. We are now hitting number 9. It says sold 25 bags of cement on credit. If we sell on credit, debtors journal is affected. And the invoice is 0011 and the amount is 3,450. Now we sold 25 bags. We need to know the cost price, we need to know the selling price, we need to know VAT. The amount of 3,450 is the one that goes to a debtor. Under debtor's control is the amount that includes VAT. So now let us calculate the this cost price and everything. 25 bags of cement. Then we have debtor's control as a debit. Debtor's control as a debit, 3,450. We have our sales. We have our VAT output. And we will see how much these figures are. Then we have cost of sales and trading stock. Now we sold 25 bags. The cost of a bag is 100 rand. So that means it will be 2,500 in terms of 25 times by 100. This is 2,500 rands. This is 2,500 rands. Then after this, now we say we know the cost price, 2,500 plus 20% of the markup. Remember, markup is 20% on cost. That means the selling price or the sales is 3,000. Then we need to say how much is VAT. I think we can also say how much is VAT. VAT is 450. That is where now the 3,450 that include VAT comes from. So we can see that everything has a column in here. Remember, the 20% is the markup percentage that was provided to us, which is constant at cost price. Then we are recording under our debtors control why we sold on credit, and each of these have their respective columns. Debtors control, this is transaction number 9. This is transaction number 9. And it was 001, 001 in terms of, or 00011, if I remember well, but I'll also verify. This is Mavimbe, this is Mavimbela, who bought or whom is sold to them on credit. Then the amount of the debtor, let us verify that. Debtors control 3,450 is 3,450. The amount of sales, we have seen that it is 3,000. The amount of VAT, it is 450. Cost of sales, it is 2,500. Can verify that again. Cost of sales 2,500, VAT 450, sales 3,000, debtors control 3,450. Remember, we don't record from the trading stock point of view. It was recorded when the inventory was bought. Then we continue on that same note, going to the next transaction, which is transaction number now 10. Only 6 transactions are left before we are done. Number 10 says the business paid an installment of 45,000 on a loan from Mzansi Bank. EFT is EFT 11. Now we are paying Mzansi Bank. If we pay Mzansi Bank, money must decrease in our bank account. If we pay Mzansi Bank, we need to credit our bank by 45,000. This is a cash payment journal. We debit our loan, which is our liabilities are decreasing whenever we pay them. Do you have a column for bank in the cash payment journal? Yes. Do you have a column for loan in the cash payment journal? No. Where do we record sundries? So that is the easiest one, cash payment journal. A payment was made to pay our loan. It was on the 10th day, and the 10th day we have number 11 is number 11, 011. Mzansi Bank is the one we are paying. Mzansi Bank. How much are we paying? We are paying 45,000. It's money that decreased to our bank account. Do you have a column for loan? There's no column for loan. So the 45,000 will then come here as 45,000. This is for the credit side of the entry from the general journal. And I'm also doing this, guys, so that to understand that there are 2 sides or 3 sides of the story or 4 sides of the story. We have seen in others, we record 4 transactions. That you must make sure that you don't make a mistake in the amounts that are missing. So now we then go to transaction number 11. Only 5 transactions left. The business received 28,000 from COSA, a full settlement of her account. So there's a customer who used to owe us money, and this customer was owing us 30,000, and a receipt was issued. Remember, if you say receipt, meaning money was received. That's why we issue a receipt, evidence that cash was received. Then now in this case, we can see that we paid 28,000. Remember, full settlement, that means you are paying the entire debt. But how do you pay 30,000 How do you circle 30,000 but you only pay 28,000? That means there is a discount which is equal to 2,000. The discount includes VAT. VAT is included in the discount. So we need to pull it up so that we have a discount excluding VAT and the amount that does not exclude VAT and VAT separately. Now, in this case, we then now need to say the debtors account is 30,000. Debtors account is 30,000, so our debtor must decrease by the amount they are owing us. So debtors control will be on the credit side. We have debtors control. Sorry to start with the credit side. Debtors control. The customer must decrease by 30,000 because he no longer owes us 30,000. Then after we will have cash that we have received. Just counting space so that we are all sorted. We have cash that we have received. I hope there won't be no space in between. How much did we receive? We received 28,000 rands. Then above that there was a discount allowed. Discount allowed. We did not receive this discount. We allowed it. Then after we have VAT. This VAT was an output VAT. This VAT was an output VAT, but we can still keep it as VAT output, or some they will say input. So these are the transactions that are affected in here. Now we need to say how much is the amount of discount. The discount is 2,000. We need to calculate VAT on discount. VAT on the discount. How much is the VAT? It will be 2,000 times by 15 over 115. As I said to you, the amount of the discount includes VAT. So we need to say 2,000 rands times by 15 over 115. Therefore, we have 2,087 as our VAT minus 2,000. I just confirm that 2,000 times 15 over 115. We have 261 as our VAT amount. Minus 2,000. This will give us the discount excluding VAT. Discount minus VAT is equal to 1,739. So now the 2,000 gets to be divided into 2. The total of this is 2,000. We need to separate it to VAT amount 261 and the discount amount excluding VAT 1,739. So that is where now, or how we get to record. All these have columns. Bank has columns, discount has columns, VAT has column, debtors control has column. So the total of this must give you 30,000. For every debit entry, there is a credit entry. Your left-hand side total must be equal to your right-hand side total. So you can just verify that. Definitely it will give you the same 30,000 rands. So we have made, in this case, we have received money from a customer. So customer's account must decrease under our cash receipt journal. Remember, we received money. So this will be a cash receipt journal. And SCOSA, whom we receive money from. This is on the 11th day. It was 010, receipt number 010. This was SCOSA. How much did we receive? We received 28,000 rands under our bank. And it's the same thing that I did. We received 28,000 under our bank. Another portion is the discount. Then another portion goes to the total, goes to the debtors control. Then we have that 28,000. Sales are not affected. Cost of sales are not affected. Then we have the VAT amount, which is 261. we put this in brackets because we are cancelling the output VAT because we have given a discount for the VAT that we have given to SARS. I might explain that very well later on. Whenever there's a settlement discount and VAT must be calculated, that VAT gets to be recorded negatively. And also the discount column, this is the cash receipt journal. Under the discount column, the discount also gets to be recorded as negative. It reduces the total amount we're owing to the customer was owing us, 1,739. Under debtors control, we have the entire 30,000 rands. Under the debtors control, we have the entire 30,000 rands, and there is the 30,000 rands that the debtor was owing us. We need to write off the account of the customer. Then I will continue on that same note to record the next transaction, which is transaction, just verify everything here. We have recorded the invoice number or the receipt number 010 on the 11th day. So all has been recorded. Remember, sales, cost of sales not affected. We are not selling anything here. And the customer is not returning but is circling the account. Only if the customer was returning or we're making a sale, then the cost of sales and the sales were going to be affected. The 12th one leaves us with 4 transactions left. There the receipt number 12. Mavimbela Kanu returned inventory with a cost price of 600. Return inventory with a cost price of 600. And a credit note of 032 was issued. That is our document number. On the same day, he made a part payment of 966 on his account and a receipt number 011. So we have in the second transaction cash receipt journal, and in the first one we have debtors allowance journal. So 2 journals are affected in this one. One customer is returning and the same customer is making a payment of his account. So now if it's the return, we need to note that the cost of the return is 600. The cost price is 600. So now if the cost price is 600, then we need to take this into account and we debit our trading stock. We debit our trading stock is the vice versa of the credit sale. We credit our cost of sales. This is normally the last one in this transaction. Then after, or let me start with the sales one and come back to the last one. Let us do the VAT first. The VAT output. Then after we do the sales return or debtors allowance, you can call it debtors allowance. Some columns they normally call it debtors allowance. Then after we have debtors control. Debtors are decreasing whenever they return. Debtors control. Then after we have our trading stock, we have more trading stock now because the customer has returned the inventory back to us, meaning the return is the return of 6 bags of cement. Then after we have cost of sales. We have cost of sales of 600. Debtors control, we need now to calculate from the cost price. Cost price of 600 times 1.2 times 1.2. This will give us 720. 720 is the selling price, meaning the selling price of the goods that are returned is 720. Then after we then need now to go and say how much is the VAT times by 0.15. VAT is 100 and VAT is 108. Selling price is 720 on the debit side. 720. The output VAT that is a return, it is 108. 720 and 108 plus 720. This gives us the amount of the debtor as 810. 28. So we move from the cost price plus 20% is equal to selling price. That is the selling price we got 720. Then from that 720, we say 720, we must add VAT. You can either say times by 1.15, it gives you 828. Then 720 minus 828 will give you the amount of VAT. Or either way, you can just still say 720 times by 0.15. That will give you 108 as the amount of VAT. So that is how we go forward to these calculations. Now the one of the part payment, which is the second transaction. Part payment will debit our bank, we credit our debtors control. Second transaction, it was 900 and something. Just to verify that the customer made a part payment 966. That is how much we have received. We received 966. On the credit side is still 966. So this is the second transaction. And the second transaction is a cash receipt journal. The first transaction is debtors allowance journal, which is a return. So two journals are affected in this case. Let us now start with the first one that we meet, which is likely to be our cash receipt journal. Cash receipt journal is Mavimbela who returns on the 12th day. And it was 011. Receipt. Yeah, it's receipt that we have received from Mavimbela. Is the receipt that we receive from Mavimbela. How much it we receive is 966 under the bank column. And also do remember that this is what we are referring to. Bank column is there. Now we need debtors control. Customers' account must decrease whenever they pay us. So now do we have debtors control column? Yes, there is 966. So this means we are done with the second transaction. What was the second transaction? The one that says on the same day. On the same day, he made a part payment. On the same day, he made a part payment of 966 in his account. And the receipt was 011, which is a cash receipt journal, cash received from a customer. Then the first one, which is the same Mavimbela, is the return under the debtors allowance journal. Now let us do the debtors allowance journal, which is a return by Mavimbela. On the 12th day of the month, we have the invoice there, or the return, the allowance, which was 032. There were two of them. Then we need to acknowledge that this customer is Mavimbela. Either is not happy with what he ordered. Debtors control will be 828. Cost price plus markup percentage plus VAT is equal to debtors control. Remember, we're given 600 as the cost price of the goods that were returned. But a debtor is not owing us cost price, is owing us an amount that includes markup, an amount that includes VAT. So hence we calculated forward. We also said that there will be sales. I just edited this debtors allowance, which is sales return. You'll find this return debtors allowance is like sales return because the customer is returned. And you set the amount of the selling price, which is 600 plus 20% is the selling price that has been returned. Is sitting there as 720 calculated. We said VAT will be 108. From this selling price, we said times by 0.15. We calculated the amount of VAT. And cost price is already given to us. They said the cost price of the goods that were returned amounted to, I don't want to erase everything, amounted to, I just want to erase the red one, amounted to 600. So cost of sales was already given to us, and we're told that the cost of sales is or amounts to 600, or the cost of goods that were returned was 600. So that's how we deal with the debtors allowance. And I hope this is the only one that we have. We normally don't have many returns when it comes to returns. Number 13 leaves us only with 3 transactions, 14, 15, and 16. The business received 6,000 from Van Wyk, whose account was written off as irrecoverable. Receipt number 12 was received. This one is a must record. It might take time for me to explain, but it's quite important to explain. Now, the customer was written off as irrecoverable. There are 3 steps that I could take to explain this. Maybe I'll just do a short recording how to account for a bad debt recovered from buying to selling, declared insolvent, then after recover. Now I won't have time because it might take me even more than 10 minutes to do that, but I'll do a separate recording on how to account for a bad debt recovered in our subsidiary channels. That will be the title of that recording, even if it's 10, 15, or 20 minutes, but it's quite important. In this case, the debtor is repaying their account, which obviously now is a cash receipt journal item. We now have received money from this customer, which is Van Wyk. If we have received money from the customer, you have seen they said receipt, then we need to acknowledge that we have received. How much did we receive? 6,000 rands. Now, if then this is 6,000 rands, then we need to say how much in total, or how much is the amount of VAT included in here. We need to account for VAT. Then now the other one will then be what we call a credit loss. VAT, now the question is, will it be a debit or a credit? It will be a credit as VAT output. I'll explain this details, well detailed, from the time we sell to the time the data was a bad debt to the time where then the data now recovered. Why are we recording the VAT as an output? Because it was returned, it was cancelled when the data became a bad debt. Then now I'll just keep it simple, but having a plan to record further. 6,000 rands is the amount. And this amount, remember, include VAT, because the customer was owing us an amount that includes VAT. It was written off as irrecoverable. Now we need to say how much is VAT that is in here, now that the customer is paying us. Or the customer is paying us, then the VAT amount is 783. Then after, we need to say how much is the bad debt, which is the credit loss. Remember, it's no longer a debtor now anymore to us, so we can't say debtor's control. It has to be credit losses recovered. Credit loss recovered. How much is the credit loss recovered? Minus 6,000. This will be 5,217. Yes, 217. 5,217. Do we have? And now this credit loss recovered is in inverted commas sales. I want to put and say inverted commas sales. When I explain the details of this, then you'll understand why I'm classifying this not as sales but as kind of income, if I to say so. Sales or income that comes to us, hence now it's on the credit side, which that income is in the form of classification of sales. The cost price is not affected in here because the customer did not return the inventory. Since we recorded cost of sales and trading stock when the sale was made, the customer never returned, but he was classified as a bad debt. So the cost price and trading stock, or cost of sales and trading stock, are not affected. So we then now finish by saying this is what we have. Make sure that the total of these two adds to the amount in the bank. Then remember, this is cash receipt journal. There's a column for bank, there's a column for output VAT, but there is no column for this one. Then it will go to sundry accounts. None of this VAT is not negative. And again, when I record this, I'll explain, or you will see why this VAT is not negatively recorded. So this is day number 13. We have received money on the 13th day of the month. and this is an amount of 6,000 rands. Thank you, Van Wyk, for paying us back. Thank you. We have received this. The amount, and say inverted comma, this is not sales, but you'll see what I mean. We don't do anything under sales. The amount that was supposed to go under sales is going to our bad debts recovered. That amount, I calculated that to be 783. Yes, 783 is the amount of VAT output. 783. Then after we have under sundries, the amount of 5,217. That is bad debt recovered. 5,217. Then we have our bad debt recovered. Please write it correctly, just for space limitation and time as a limiting factor. Now that is how we record the recovery of the debt. Then now go to the next one. The next one, number 13 is done. Then number 14. The business bought a new forklift, and then now if we buy, we need to check if was this bought for cash or credit. This was bought for cash. If it's cash, therefore now it will be a cash payment journal. It will be a cash payment journal. This is a vehicle that we use. We can't classify as equipment. It's a vehicle that is used for loading. For loading of material, your cement and other material that are a bit more of a weight. The amount of this is 150,000. VAT is always assumed to be included. What did we buy? We bought a vehicle. Now, if we bought a vehicle, let us then debit what we bought. And we always debit what we bought. A vehicle, then we will claim input VAT because this is a business vehicle. Then, because we bought it for cash, our bank will be credited. And this is 100, just to verify, 150,000 rands. 150,000 rands. The 150 includes VAT. 150,000. So we need to know the amount which is 100% before VAT. It will become the cost of the forklift. The cost of this forklift in the cash payment journal then appears as 130,435. 130,435. Then VAT will be minus 150. It will be 19,000. 19,565. 565. Then that will be the recording of this. Remember, the cost of the product we buy must exclude VAT because we are going to claim VAT from SARS. Remember, VAT has no column in the cash payment journal. Sorry, vehicle has no column in the cash payment journal. So the amount of the vehicle, 130,435, will go to our sundries. Then we have our cash payment journal. This is day number 15, or day number 14. Day number 14 in our cash payment journal. We have 0112 as a receipt. This is MATMIT cars. How much is the amount that we paid? We paid the entire 150K cash. It's not trading stock. Remember, our VAT was 19,000. It was 19,565. 19,565. Then how much the cost of this vehicle that we bought? 130,435. Think I still remember that one. That is the vehicle. Why? Because the vehicle does not have a column in this journal. Therefore, now it goes under sundries. Then after we explain what is it for. One before the last. The bank statement from Zanzibar Bank reflected interest on the credit balance. Remember, interest on the credit balance meaning is a favorable balance. Credit balance is a favorable balance, meaning we have money in the bank. So this interest becomes income. So if it's income, meaning we have received it. And if we have received it, meaning we debit our bank because we have received money, and this amounts to 7,000. Then how much will be on the credit side is interest income. Interest income is an income, and incomes increase on the credit side. Interest income is an income, and incomes increase on the credit side. So this will be cash received. We have received cash. This is on the Van Wyk was 012. Van Wyk was 012. Then on the 15th day in the cash receipt journal, there was bank statement number 3. There was bank statement number 3 where Mzansi gave us interest. This is Mzansi Bank. We received 7,000. But interest does not have a column, which is the credit side of this entry that I have shown you in the general journal. This one does not have a column. Therefore, it goes to our sundry column. So we'll have 7,000 there. Then the details will be interest. Then last but not least is within 1 hour 21 minutes we are then wrapping up our transactions. We have the last transaction number 16. The business returned 8 bags of cement worth of 920. Now when we are returning this 8 bags worth of 920, we need to be mindful of the fact that the cost of the bag, including VAT, was 115. So now if we say 115 times by 8 bags, we get to 920. So now that means it's still consistent to say the cost per bag is 115. Remember, the reason why now we use 115, when we return back to the supplier, we must include the VAT that we removed from the supplier. But when you sell to the customer, then the cost of the product will exclude the VAT. Be mindful of that. This cost is before VAT when we return to the supplier. But when you sell to a customer, the cost that you are using is 100 Rand after we have removed VAT. So that is why now we use 115, not 100. We are returning back. So we'll say, guys, add back your VAT. This is how much we are owing you. So that is where this comes from. Therefore, now we need to say the 920 include VAT, but now we need to take into account the fact that it's a return. We must include that VAT back. So this is the transaction that is under our returns, which is creditors allowance journal. This will be our creditors allowance journal. If we are returning, just note when we bought, we know what happened. When we return, we then now have to make sure that we debit our creditors control. When we return, our liabilities will decrease. Then I will have VAT. I still always classify it as input VAT. Then this will be trading stock. We have less stock on our side because we returned it. Then the VAT must also be reversed. The amount of 920 is inclusive of VAT. Therefore, now we need to say 920. How much is the amount without VAT? Obviously, that will be 800 times by 100. That is the amount that includes VAT. It will be 8 times by 100, it will give us 800. But I'll also verify that that will be 800 under the trading stock. Is an amount of 920 that include VAT times by 100 divided by 115. We are looking for the cost excluding VAT, but we also need to separate VAT in there and say VAT is 120, which is 800 times by 0.15 will give us 120, or 920 times by 15 over 115. Because VAT is included, so we divide by 115. That still gives us 120. So that will be your return. Debtors, or sorry, creditors allowance journal. That is where we are recording. Then that is our number 16. The first part of number 16. There is the invoice. Then the second part is the payment that we also made to this supplier, whom we were owing them some cash. So creditors allowance journal, that is where we are returning back to our suppliers. This is day number 16 that we are dealing with, day number 16, document number. It is 456. Details, we are returning to our BBC manufacturers. How much are we returning? Including VAT is 920. How much the cost of the inventory? The cost of the inventory is 800. How much is VAT? Is 120. And all three entries, they have columns, this, and this. Remember, this is the inverse of the buying. When we bought on credit, this was on the credit side, and these two were on the debit side. So now that we are returning, it becomes the opposite. You can also check on the previous one that I did. When we buy on credit, we debit trading stock, input VAT, and credited creditors control. When we return back to them, it becomes the opposite. Then the next same transaction on the same transaction is the fact that we made a payment now. We made a payment, and I like these double transactions. We made a payment. This was for the return. Credit note was received. It said now 27,750 was paid to BBC on the same day. Remember, we are owing them, and we took the opportunity to pay them the 27,750. If we pay, remember VAT is not affected. We debit our creditors control. We credit our bank because money went out. How much? 27,750. 27,750. Now, this is a cash payment journal. This was a creditors allowance journal, and we record it in here. Now we need to make a payment in our cash payment journal. VAT is not affected when we pay unless we are given a discount. Again, VAT is not affected when we pay our creditors unless we are given a settlement discount when we are making a payment. Similarly, VAT is not affected when we receive money from a customer unless it was a bad debt recovered or unless the customer was given a discount at the point of payment. Then now we are under the cash payment journal, 16th day. Cash payment journal, 16th day. The transaction is 013, document number 013. And this is BBC manufacturers. We are paying our suppliers well, BBC manufacturers. And we have to look at the amount of bank that we are paying. Let us check the amount of bank that we are paying. Just need to verify that one, if my calculations were correct. Credit note or 27,000 was paid to BBC on the same day. And this is EFT number 13. So this is the payment that we have paid. We paid 27,000 as a cash payment journal. 27,750 is what we have paid. So there's no discount mentioned. So if there's not discount mentioned, that means how we have corrected, we have recorded is correct, not discount. So it will be the same 27,750. 27,750 in our cash payment journal. Just wanted to verify that. Under bank, remember that is cash payment journal, 27,750. Under creditors control, our creditors is the same thing, 27,750. So that will be the amount that will be recorded. There we recorded under each column and we recorded under each column both amounts. So our sundries are not affected. With those words, guys, allow me to say thank you. I will not be doing the totals. Please do make sure that when you write the totals in here. At the end, we need the total for each of these. Total for each of these. I'll only write the one where it's just single amounts. Total for each of these, 1,739. Write all of them. 21,739. There are marks for the total sometimes, 27,750, but it's also important to finish everything. Yeah, I will not be doing all of them, only the one that are single amounts. This is something that you can easily do. 600, 108, and this is your total column or total row. Yeah, with those words, guys, on my side, I can say thank you very much. I hope you have learned a lot from this session of today and from this recording. Please be on the lookout for the one where I will be dealing specifically with the recording of a bad debt recovered. From the time we sell to the time there was a declaration of bad debt to the time where now the bad debt recovered. It's in 3 lanes for you to understand it so well. With those words, guys, thank you very much. See you in the next recording.